Crypto.com hits $20 valuation on Citadel Securities. $400 million bet Crypto.com raised $400 million from Citadel Securities, a deal that values the exchange at about $20 billion and marks its first institutional funding round. Decrypt reported the investment on July 17, 2026, framing the market maker's stake as another sign that Wall Street trading firms are pushing further into crypto. The timing sits against a soft market. As of July 17, 2026, Bitcoin traded near $63.34, down 1.6% on the day, with Ether at $1,836, down 2.6%, and the Fear and Greed Index reading 31, or fear, per coin market cap. A nine-figure private raise landing during a risk-off stretch says more about long-term positioning than short-term price sentiment. A market maker taking an equity seat, Citadel Securities, is not a venture fund. It is one of the largest electronic market makers in the world, handling a substantial share of U.S. equities and options order flow. When a firm whose business is providing liquidity buys equity in an exchange, the read is straightforward. It wants a closer structural relationship with a venue where trading happens, not just exposure to a token's price. For Crypto.com, this is the first time it has taken outside institutional capital. The exchange has funded its growth through trading revenue, aggressive marketing, and a large retail base rather than private rounds. Accepting a strategic investor now, at a $20 billion mark, reframes it from a self-funded consumer brand into a company that institutional counterparties are willing to underwrite directly. Reading the 20B valuation, a $20 billion valuation, puts Crypto.com in the upper tier of crypto exchanges by private mark, though still below Coinbase's public market capitalization. Two things stand out about the figure. First, it was set by a professional trading firm rather than a crypto-native investor, which tends to price on liquidity, order flow, and regulatory standing rather than narrative. Second, it was struck while sentiment sat in fear territory, suggesting the price reflects the exchange's revenue and reach rather than a bull market premium. Private valuations are not liquid marks. A $20 billion figure agreed in a strategic round can move sharply if the company later raises again or pursues a listing. Treat it as a negotiated reference point between two parties, not a market-clearing price. Wall Street's deepening crypto footprint. The investment fits a broader pattern of traditional finance firms building crypto positions through infrastructure rather than speculation. Market makers, custodians, and clearinghouses have spent the past 2 years wiring themselves into digital asset venues. Citadel Securities taking an equity stake in an exchange is the trading desk version of that move. That shift also runs alongside the institutional flows tracked elsewhere in the market. CME crypto futures cleared record volume last quarter, and asset managers have filed for a wave of spot ETFs. A market maker anchoring itself to a large retail exchange is the connective tissue between that institutional plumbing and the millions of everyday users who hold balances on platforms like Crypto.com. Practical read for Crypto.com users. For people who hold funds or spend through Crypto.com's ecosystem, a well-capitalized backer is a stability signal rather than a product change. Nothing about the raise alters fees, rewards, or card terms today. It does reduce the near-term risk that the exchange is under-resourced, which matters for anyone parking a balance there. The company runs one of the more prominent crypto card programs, and its reward structure ties benefits to staking its CRO token across tiers. That mechanic carries a standing caveat unrelated to this raise. Card perks bought with a staked token expose the holder to that token's price. A drop in CRO can erode the value of tier benefits even when the cashback rate stays fixed. So the break-even math depends on where the token trades, not just the advertised rate. Anyone weighing a tiered card should read the full Crypto.com card lineup terms before locking up tokens. For the wider field, the deal is a data point about who is willing to own a piece of a crypto exchange in 2026. When a firm that prices risk for a living writes a $400 million check into a venue during a fearful market, It is a statement about where trading infrastructure is heading. Readers comparing where to keep balances or spend can weigh that against the broader menu of crypto card options and the custody trade-offs each one carries.